Yes. Hey, Jeff.
I can hear you.
Hey, good to see you guys. Sorry, I was just wrapping up the Utah State team meeting there. If you had logged on and saw that. Hi, Kim. Eric, James. Hey, Alan. Nice to have you on. How's everybody doing?
Good. How are you doing?
Good, good. Got Sydney in the house.
Hi, Michelle.
You guys are looking skinny.
Looking skinny.
Well, thanks.
That's awesome. So who had something exciting happen over the last week? Shantae.
I do. So this was a long one, but I think I've mentioned to you that I had two back-to-back transactions that had gone through 4 extensions, and it was just crazy, right? We had a solid buyer under contract the first day this home went on market, everything verified and good. We ended up having to go through 4 extensions before we were just like, there's no way, we're calling it, right? The lack of communication from the buyer's agent and the lender was just beyond lame. I have so many words, so many sleepless nights. So we filed termination the day after the 4th extension expired, and our backup buyer was still interested, and she was now cash. So this was fantastic. So we were moving forward, and I finally have confidence we're actually going to close both transactions this week. But I don't know if this is an Oregon thing or if it's a title thing or a real estate thing. Y'all know that I like to cross my T's and dot my I's. You know, the contract had expired. We were out of contract. I sent the termination agreement anyways to make it official because we had already released earnest money. But title was saying that we still couldn't close on the new buyer until the termination paperwork was signed, because the original buyer still had an option to purchase, even though they were out of contract. And of course, with as lame as the buyer's agent had been, I had not been receiving the termination paperwork. Like, I was reaching out to him every day. I reached out to his principal broker. Finally, I got it yesterday. Finally. But I had to be like, hey, what happened is unfortunate for everyone, but was a material breach of contract. And we really don't want to enforce that, but don't make us go there. Get me the paperwork and let us move forward. So I don't know, do you have any, so super great news, but do you have any feedback for me? Like, I'm super curious if there's something that I was missing there.
Missing in regards to getting that paperwork and getting that one closed out?
Yeah, so from my perspective, we were out of contract, right?
Right.
It was expired, the lender was not closing, and we were out of contract. I mean, I filed the termination paperwork anyways, and my seller signed it, we sent it to the buyer. But for me, that was just like a technicality. It was just to wrap up my file. But the title company said that they weren't going to be able to close with the cash buyer until that termination paperwork was received.
No, you mentioned something. You mentioned something when you were explaining that you were out of contract, but that the buyer still had an option. I'm not sure what you meant by that.
Well, that's what the title company said. And I'm like, but they were an FHA buyer. It's not like it was a seller finance or anything like that. So to me, they lost their option to purchase when they were out of contract and expired.
Title companies are going to try and protect their butt, of course, for disbursement. But as far as I know, and maybe Alan could even chime in on this, but if the contract is out of contract, it's expired, there's the deadlines have lapsed, and they didn't get their financing, they didn't get their settlement deadline, there is no contract to close upon. It's not a valid executable contract at that point. So it would have to be brought back to life by you can revive that or reinstate a contract. Go ahead, Kim.
I had the same thing happen here in Utah years ago. The title company would not let them take the next offer, even though our offer was out. It was out. But the title company gave us crap about it. So we had to sign cancellation, which the interesting thing on our end is the buyers wanted to negotiate getting back some of their earnest money. And because they couldn't move forward, they negotiated half of their earnest money back before they would sign the paper. So I didn't think it was legal or right either, but that's what happened.
That is interesting. Yeah, for us on the fourth extension, in order to approve the fourth extension, we made the earnest money non-refundable. And so they had already released that by addendum, but the title company did already cover their butt on that because they put together hold harmless in respect to the release of earnest money. So that wasn't being disputed.
I got a couple of thoughts on that. Like one, like when we deposit earnest money at a title company, even though the REPC clearly states that earnest money shall be returned to buyer or earnest money shall be returned to seller based on default, the contract states, they're going to make all parties involved sign off on that because they're the ones holding that money and they don't want the liability of doing that. Now, if it's with the broker, Kristen, our broker, just has to read the contract and said, yep, this is what the contract says. Earnest money is reversed and sent back automatically. So here's another example, like title companies. Well, it's a whole different issue. I was going to mention something about bankruptcy, but it has nothing to do with this transaction, so I won't go there. But so that's going to be a title company thing, kind of protecting their butt. Alan, do you have a comment on that?
Yeah, I was actually going to say the exact same thing, that the title company is just going to have to do a CYA before they're going to release, just because they don't want to get sued, whether they know they're going to win or not. I would say that these vary by state. You know, for example, in Arizona, it's very different than in Utah. But effectively, you're extending the contract by signing the closing papers as a seller. And so if you haven't done that, if you haven't taken action, if it's expired, you know, the title company is going to take that action. But I agree with you, Jeff. I think that's a good example of why maybe holding earnest money not at title can be a good idea, unless it's somebody that you really have a great relationship with.
Yeah, that's interesting. I mean, for us, the earnest money had actually already been released a week prior to the expiration of the fourth extension.
So the title company wouldn't allow you to accept another contract, were you saying? Maybe I misunderstood
that.
They
allowed us to accept the offer and to work through the process, but they wouldn't allow us to close until we received the signed termination from the buyer. And the buyer took 16 days to get that to me.
That sounds like, I don't know, Jeff, that to me sounds like a state insurance complaint, if somebody did that in Utah, at least, because the title company's not acting within their fiduciary duty at that point to prevent closing on a transaction based on a contract that's been canceled by the seller due to breach. I don't know, Jeff, what's your thought?
Yeah, that's exactly my thought. That's their own internal policy. They're making demands on you based on what covering their butt, like we both mentioned. You could have probably taken that cash buyer and closed them somewhere else. But the fact that they had that one and they hadn't in their books closed it out yet, and you wanted them to close another one, they said, well, we're not going to do this one until this happens on this one. But you probably could have gone to an attorney or to another title company and done this one because you were out of contract.
Right. And it's so just at that point, we only had like 3 or 4 days, right? So to get the attorney and make the changes, right. But that's what I was thinking. I was just worried that there was something from a real estate perspective that I was missing.
No, and just one comment on the fact that you said that they negotiated part of their earnest money back, even though they had lost it.
That was on Kim's.
Oh, that was Kim's. Okay. Well, that wasn't right either, but it's kind of like they force your hand on, well, pay us or we're just going to screw up your transaction or whatever. It's similar to somebody filing bankruptcy and the court system has said, hey, they filed bankruptcy, they no longer owe this creditor any money, but that doesn't release liens that are attached to somebody's property. The court said they don't have to pay them, but if they've got a lien on your property, that still has to be cleared up in order to transfer title. So I've often heard of people that were wiped out in bankruptcy, still demanding something in order to clear up title to transfer that property, which is not really fair, but a lot of people are opportunistic in their approach to, getting something they're not entitled to. So,
hey, Jeff, if I could chime on one more thing, because this actually ties into what I was going to talk about today. One of the challenges I think that we run into as an industry is when things like this happen, it's really easy to just say, we're going to have to work with these people again. Let's just move on and forget about it. And And so nothing ever changes. And so when things like this do come up, I think it's important to reach out to the appropriate party, whether that be the owner of the title company or the state insurance commission, say, this is what happened, and I'd like to make sure it's known so that those issues don't recur again and again. Because we all work together inside the industry and everybody wants to play fair and be nice, I think we avoid taking appropriate action to notify regulatory authorities when bad things happen. And when people do things that are not within the bounds of the law. And like that, I mean, I don't know the rules in that state, but I can tell you in Utah, if that happened, I would be strongly encouraging someone to reach out to the state insurance commission. So I think it's important to think about that when these kind of things come up and say, okay, is this something where it's worth a phone call to the next level up of person so that this doesn't recur to another person, that this isn't something that somebody else has to deal with. And maybe as an industry, we can kind of clean ourselves up just a little bit from having these types of things recur, because I think everybody's got a story like this where something went wrong, but very often the end of the story is, so we finally got it closed and man, I was so glad not to have to work with that again. And I wonder if maybe the end of that story might need to be, and so I called the insurance commission. I let them know that the title company had stepped outside their bounds so that they wouldn't do it again. I don't know.
Yeah.
That's a really good point, Alan, because I think every one of us here on this meeting has had an instance where we've had something occur with another agent during a transaction and is worthy of a complaint being filed with the division or the association. And sometimes we think, I know I've been there, and it's like, it's not worth it. I don't want to get involved. I go through all these things and oh, just let it go. I can't dwell on that negative energy. But to your point, Alan, I mean, nobody will know that behavior is going on if somebody doesn't raise their hand and voice their concern and say, it's just like a FYI, right? Hey, I just want to let you know this. I'm not really trying to damage this person's career or whatever, but they need maybe a learning lesson in this circumstance that what they did wasn't ethical or whatever the situation might be. I know Lynn and I, when we were younger, we got involved with a lawsuit on a builder that lasted almost 5 years. Oh. And the main reason we pursued that lawsuit was a matter of principle, because we knew for a fact that he had done it before. And if we didn't get involved and take this to court, that he would do it again. So we felt it like our responsibility to save that next person. And even that being said, in hindsight, looking back, it's just like, what a waste of my life. It went on and on and on. And we spent like 50 grand on attorney fees, and it was just ridiculous. But we did, stop him probably from continuing that behavior. And so there's that. So it's a convenience decision, right?
Yeah, no, I agree. I've already, I have a message into our state broker. I just want to make sure there wasn't some piece that I was missing based on Oregon law. So I've done my own research, and then I'll be talking to the title company directly. And I am filing a complaint against the lender for sure. The agent, I don't know. But right now I'm super thankful that I can sleep at night, and my clients, I personally am losing $7,000 because my cap reset June 1st. So that does not make me happy. But bottom line, taking care of my clients, and they're closing this week.
Awesome. That's the right attitude for sure. Good on that. Speaking of closings, I was looking at my back office, and I just want to point out things. This is from April. Okay. There's a lot of agents not doing transactions right now. People are slower. There's, some shifts going on, and we're having to try and educate and kind of coddle our buyers a little bit more and let them understand that the situation we're in is the current market conditions, and maybe their comparisons aren't fair for them to not really be taking action. But here's some numbers just from our team. The Reigns team in April closed 8 transactions. How awesome is that? Amber and John Romney, 5 transactions in the month of April. Kendall Burgess had 2, Brianna Greenwood had 2, and then here's a list of the people that had at least 1. It was Debbie Taylor, Chase Marchant, Shaw, Jordy Clark, Tori Tabal, Christy Cruz, Murray Clark, Jake Rollins, Jesse Tucker, and Melanie Zitting. Isn't that awesome?
You skipped Sid.
Oh, Sid's right here. I'm on that list. Sydney had 2. Sorry. I went from 8 to yeah. Awesome. So, I mean, congratulations, you guys doing transactions. You're out there, you're doing it. And thanks for sharing, Shantae. Anybody else have anything they want to share as far as a win, something great going on that we can be inspired by? Well, my pool's getting plastered today, so there's that. Shayna, were you talking? You're muted.
Oh, no, I wasn't talking. I just hopped on really late. So sorry about that.
Oh, okay. Oh, that was echoey, huh? So I was actually going to call you out, Shayna, so I'm glad you're on here. You made a really great post today about, I think you called it the power list, you and James have been working on, and you were just, I think, walking this morning. Or maybe it was an older post, but it said it was Monday, so I'm assuming it was this morning. And just some things that you've been working on the power list, and the 5 things that you want to get accomplished during the day, and how that's been working for you. And then I know you've got some good momentum going with some events you're doing, and you're putting yourself out there and starting some conversations. So I wondered if you might, because I just really liked that post, if you might expound on that for those that didn't see it, and maybe even just reiterate what you were talking about in that post.
Okay, that's a lot of pressure. So I actually give the credit to James, so he can probably chime in after me, but he's been doing this power list. I don't know how many he puts on, but I've just been doing 5. And I've been kind of just implementing it here and there, not very consistently. But then like this morning, I'm just coming from the bank and I already have everything done that I wanted to do today, and it's 10:15. And it just feels so good. And so everything else is just kind of getting me ahead for the next thing that I want to do. And so, yeah, I'm not perfect at it. I'm not great at it, but we're kind of been talking to our kids about it too, and just making sure they're getting their 30 minutes of being outside, their exercise, their reading, things like that, the priority things before they jump to the screens, since they're home for the summer. Anyway, and just kind of building that consistency and that discipline of getting the important things done. Because how many times do we get to the end of the day and we're just like, crap, I have so much to do still. And then it just rolls over to the next day and your list is even longer. And so if you just kind of focus on those 5 power list items, it's amazing how you feel. And it's like, of course, there's more for me to do than the 5 things, but what are the top 5? And it just really kind of changes your attitude in productivity. And I mean, I imagine I'm going to get even more done today, because I have this energy of completion and getting these things done. So James, I don't know if you want to add to that. He's really good at it.
I don't know. I think that's good. I think more specifically, the 5 things on the power list, you could do 3 or 5, whatever you want to do. This all came from something that I've talked about numerous times, is the 75 hard program. So in phase 1, which is 30 days, you do 10 minutes of visualization, and you write down stuff on your power list. So what I do, I don't know if you can see this, don't necessarily need to see the specific things, but basically once a week, I typically do it on Sundays. I'll just do a complete brain dump on things that I want to get done. And then I can kind of sort them by business or like family stuff or whatever. But specifically the power list, I didn't create it. It was this guy named Andy. Those 5 things are business related. So you pick out the top 5 things that are going to move your business forward, and you do those before you mess around or do whatever you want to do, or, go play a round of golf or whatever. And what he does, regardless whether he gets done with his power list at 8:30 in the morning or whether he gets done at 11 o'clock at night, after he gets those 5 things done, it's basically free time. So it's been really good. And it also kind of teaches you, like, let's be honest, some of the things you do for work just are not that fun, and you kind of
yeah.
The best thing I can relate it to is stepping into the shower and knowing it's cold water, and you just stand there like, I know I'm going to do it, I might as well just jump in and get it over with. But once you're in it, you're like, okay, this is fine. And so once you start doing that on a consistent basis, the time that you stand in front of the cold water is going to diminish each time. You may stand there for 1 minute, then you're going to stand there for 4 minutes. But one thing that's really helped is I think it's Mel Robbins. She does the 5-second rule and counting backwards. And so that's what I do. I'll stand there, I'm like, okay, I know what it's gonna be like, because I did this yesterday, and then I go 5, 4, 3, 2, 1, and then I just get in. And you might as well completely immerse yourself, because if you do it slowly, you're just drawing out the pain. So, and that's kind of what the power list is. Just jump in, get it done, realize this is what I need to do to move my business forward. And if you want to, before the power list, I like to do the 10 minutes of visualization, because that could be like family stuff or business related things. It really kind of focuses your mindset, or you could do some breathing or something like that. And then your mind's clear, and you just jump into the power list and get it done. That's my spiel on that.
I love that. I love that. Shayna, I love what you said too. You're both kind of talking on the same theme, but it creates that energy early in the morning. You mentioned you've already accomplished those 5 main things, and you had those wins. And so your energy's heightened throughout the rest of the day, because the opposite of that is what? It's the feeling we get when we procrastinate. If you save those 5 things to the end of the day and you create the list, you're almost sabotaging yourself by not jumping in. Like James said, you just get in the shower, 5, 4, 3, just do those first. If you say, well, I'm going to do them this afternoon, you're going to be thinking about them, maybe even subconsciously, and your energy and your efforts towards other things might not be as focused, because you're realizing you should be doing your 5 things and getting those done first. So I love that you knock those out first thing in the morning and create that.
Well, and Jeff, if I can add, I think it's really important to what James said about the brain dump at the beginning of the week, and just kind of thinking about all the things that you need to do for the week, because I think that's been my challenge in the past, when I kind of don't plan out my day and I don't have a specific list of things to do. Your day gets away from you so quickly, especially when you've got 4 kids at home in the summer and, you're busy. If you wait and put things off till the afternoon, by that time I'm running kids around everywhere to friends' houses and doing all kinds of things. And I don't have that energy anymore to want to get that done. And so I think just creating that big power brain dump list at the beginning of the week, and then just kind of use that as a guide every day to plug it in as the week goes on.
I love that. Finding those activities that get you in that energy is really important. And again, back to you, Shane, I'm just remembering conversation we had a little while ago about the pipeline kind of drying up. And I need to feed that. I need to get some momentum going again. And I feel like that's another example of how you changed your energy and you started doing things very purposefully about open houses. And you had sent me a text about how your phone rang at the open house by 2 different people that were reaching out that they need you to help represent them in their business. And things just started happening because you put yourself in a frequency of action and motion and intention. And it's like, oh my gosh, what a crazy day you had. It's like all this happened in one day when you sent me that text. And I think that's very deliberate. I think if we're wondering, oh man, where are we going to get our business and this and that, we just need to get our butts out the chair and get moving, right?
Hey, Jeff, if I could share a resource that I use. And when James and Shayna publish their book, I'm going to buy it instead. I use a system called Win by Noon. There it is right there. It's just a planner. I'm a paper person, so it is exactly what they were describing. And the idea is it kind of gives you your day plan of what you're going to do. And the concept is you need to pick your 5 things and get it done by noon. So James and Shayna, when you guys publish your book, let me know so I can give you money instead of this guy. But it's for those of us who are not as organized as them, there's a realtor version as well. And it's a pretty good resource if people like paper.
No, I love that.
So jump on Etsy, Shayna, and there's your next project to make me a new planner so I can pay you money.
Awesome. Anybody else have anything they want to share with the group here, or even throw out for comment and collaboration before we move on?
Hey, Jeff, it's Eric.
Hey, Eric.
I wanted to share real quick, maybe one of those top 5 things you do before noon is reaching out to your SOI, because right now, this is such a great time of year, and it's good to retouch those, important past clients and SOI that you have, because a lot of people like to move this time of year if they're looking at making a change because of, school. right? They want to be into a new house before school starts. Such a popular time, and things are picking up like right now. I don't know if you've noticed just in the last couple of weeks, but Michelle and I did an open house on a new listing just a week ago, and we had 8 people in an open house, and 3 were really interested, which is a lot better than 1 or 2 through your open house like we had in February, right? So it's picked up a bunch, and it went under contract too within 2 days. So that was really fun. But just we've had a lot more people looking to make changes this time of year, which is kind of consistent with the past. So reach out to those people and keep that in mind, that this is a really hot time of year, despite what interest rates are doing right now.
Great advice, Eric. I think there's a lot of people that want to take action and they need somebody to hold their hand and help them through the process, right? You know, we've got SOI thinking about it, but they're uncertain. Maybe they're nervous to take action. Maybe they think they're hitting the timing wrong, whatever. So making that connection and being their buddy through that process and really their guide. I've found that my clients like to be told what to do. It gives them a little bit more confidence in moving forward, where they have that advocate and you taking them through the process and just, you know, say, this is what's going to happen next. This is what it's going to look like. If you take them one step at a time, it's not as scary as looking at the whole big picture. It's like, let's just start the process here, and then we'll go to the next step and adjust if needed. So good advice, Eric, having those conversations for sure.
Sorry, Jeff, can I add to Eric's comment? So I was just thinking to go along with what we were just talking about too, because when he said that, it made me think, there's also, like, while you're in that early morning energy, if you will, contacting your sphere, your SOI is like, it just feels so much better contacting them before they have to contact you. I don't know if you guys have experienced, like, in the afternoon, a lot of times people are asking me questions about the time I'm picking up my kids from school. And that's kind of like a sacred time in the car for me, is to be able to listen to the conversations they had at school. And, you know, and I do not want to be on the phone working at that very moment. And so I find that if I'm proactive in the morning and I'm reaching out and touching base with the client and just following up with them early on, then it prevents them from having to come to me and be like, hey, what's going on? You know, and it just looks better on our end to just being the first one to reach out. So I just thought I'd add that because it made me think that that's a really good reminder for that reason.
Super cool. How many of you made those phone calls and the person on the other end says, I've been meaning to call you, or I was thinking about you, and they hadn't made the call? So that's super appreciated. All right, guys. It's kind of interesting. Shantae started out the conversation today the way she did, and kind of turning to making comments and getting involved and maybe being proactive about helping the industry and changing the industry, because that's why Alan is on the call today. James invited him to be here. A couple of weeks ago, James actually showed me a website about a proposed ruling that I hadn't even seen before. And I'm admitting right now that I am not very good at all. In fact, I'm horrible at being as involved in the happenings of the industry as I should be, and having a voice and a say. And the next thing James showed me was Alan's comments on the issue at hand. And it was, I didn't read it, but he just showed me on his phone. It was several paragraphs long because he had an opinion on this thing that was being proposed. And it's in open comment period right now. It's a fair lending, fair housing, equitable housing finance plans proposed rule. So it's a proposed rule. It hasn't been established as a rule yet. So Alan, I mean, I'm glad you're here because I haven't even read this. I clicked on the PDF and it's 68 pages long. But this is important. Again, I'm speaking for myself. We need to be more involved in our industry and in having a voice and a say. So Alan, I'm really glad you're here. So maybe from your vantage point as a lender, share with us what this rule is and why you commented on it and why that's important for us to get involved.
So if I could, let me give just a little bit of background on that so that we can all have the same understanding. And I'm going to start off before that by saying, Shana, what you and James were talking about, another great resource, if anybody isn't looking at it, you should, and that's the National Association of Realtors annual home buying report that they put out on home buying trends. They talk about the ages of buyers, when they're buying, how they're buying, when they found an agent, how they found an agent, what they do. And that survey for the last couple of years has shown the same thing, which is about 0.75% or 3/4 of all of the people who work with a realtor to buy a house would use that realtor again, but only 28% of them actually do. And so 50% of people who want to work with their agent don't, because probably their agent just didn't happen to be in touch with them. So I think that's a pretty valuable number to know. But if you haven't looked at that report, it comes out every year. It's super useful. Okay, so let's talk about rules and policies and FHFA, which I know is super exciting for everybody. So FHFA is not FHA. The FHFA is the Federal Housing Finance Administration, and they're the regulatory framework for Fannie Mae and Freddie Mac. So when there's rules that are made for Fannie and Freddie, they actually come from this FHFA, which is part of the Treasury Department. So they make the rules, they come up with the way that Fannie and Freddie are going to do business. You can go to their website, which is FHFA.gov. And Jeff, I'll just send you an email with some resources if you want. You can share with everybody when we're done. But at FHFA.gov, you can go in and find all of their current announcements for policies, for changes, for what's going on. And it's incredibly valuable to stay on top of because of the way that it impacts your buyers and your sellers, really, as far as how they're going to be able to market and sell a property. And hopefully the lender you're working with might keep you in touch. We try and do that, but there's a lot going on in that world that you want to be aware of. And that's a place you can start, just so that you can become a resource for your clients as well, without waiting for somebody else to tell you what's going on. And it's hard to stay on top of, but that's a great place to start. So when FHFA wants to make a change in the way they're doing things, they can propose a policy. So they can say, our new policy is going to be to do a certain thing or act in a certain way or promote a certain type of home ownership. And that policy is just an internal guidance that they use to maybe gauge against their decisions. The difference between a policy and a rule is that when a policy is proposed as a rule, that policy now has the binding force of law. And it goes from just being a way that we might want to operate to this is the way we will operate for the foreseeable future. And it's a really important distinction. So let me give you the example that I'm talking about today, and that's the Fair and Equitable Housing Policy or Program. The Fair and Equitable Housing Program has been in place for a couple of years, and the idea that FHFA has proposed is that more people need access to housing, which is something I think everybody is going to universally on this call agree on. We want more first-time home buyers. We want more people coming in the market. If we don't believe in housing and we don't believe in the value of home ownership, we're not doing our jobs. And so on board, great, that's a great plan. But the implementation of that rule has been to promote housing in underserved communities. And those underserved communities are typically in urban areas. They're in areas where you have a different borrower profile. And by that, I mean a different credit score scenario, different down payment options and things like that. So to promote housing within those spheres, what this Fair and Equitable Housing Program is doing is making it so that it will be less expensive for people who fit those criteria in those categories. The way they define that right now is based on credit score to get housing. In other words, somebody with a lower credit score is going to have easier access to housing than perhaps they've done in the past. Does that make sense? Mm-hmm. All of that sounds great. The problem is, how are you going to pay for it? And the way that they're paying for it is that people who are not in that category, who have better credit, who have more money down, who aren't buying their first home, are paying more. And so you guys might have seen this a couple of weeks ago. There was a rule that was actually, this rule was proposed in September, and this rule change was proposed then. And it went into effect in May, and it showed up on social media and all over the place that people with higher credit scores were going to pay more. Did you guys see that? If you have a higher credit score, you're going to pay more, right? Kind of, not really. It was kind of questionably true, let's put it that way. But this rule is the background for what that was. And the rule that's being proposed is to put this policy into permanent place so that housing will be promoted amongst those that are, again, typically underserved. Where this all comes into a little bit of a political turmoil is the reality is that people who have lower credit scores in America also tend to not be white. And that's the underserved community we're talking about, is the minority community. And to address that in a way that's going to fit guidelines for like housing discrimination, FHFA can't just say, okay, if you're not white, you get a better rate. What they're doing is they're saying, if your credit scores are lower, we're going to lower the guidelines, we're going to lower rates, we're going to make it more accessible. Again, this doesn't sound bad because I'm all about it. But the trade-off again is that it's much more expensive for everyone else now to get a loan. So to give you an idea, if you are a first-time home buyer with income under the area median income, so in Salt Lake County, that means you've got income under $99,600 and you're buying your first home and you have a 640 credit score, you're going to get the exact same rate as somebody with an 800 credit score and 40% down. And if you have a 720 credit score and 5% down, you're going to pay about 0.5% more in rate right now than someone who's buying their first home with that lower income. Does that make sense? So it's really good for first-time home buyers that have income under that level, but it's not good for anybody else. It also added additional costs for refinancing. It added a very substantial cost for people buying a second home or an investment property. So those costs all went up significantly, and these other costs went down. And the reason why I think this is concerning is in the past, let's say the last 10 years, pricing for Fannie Mae and Freddie Mac has been based on merit, right? You've got good credit, you have money down, you get a better rate, which is great because that gives us stable financing. Prior to that, we had that whole housing recession, right? And really the foundation of that housing recession can be tied right back to this thing called the Community Redevelopment Act that came around in the 80s and 70s that did exactly what we're doing with this new rule. In other words, it lowered the bar for lending and it made it more accessible for people that didn't have a demonstrated credit history to get a lower cost mortgage with less money down, which led to people buying houses maybe they couldn't afford as well. So this is kind of the first step down, what I think is a pretty slippery slope towards that. Good news, if you work with first-time home buyer, you're going to get a better rate. But if you're a second buyer, buying an investment property, buying a home for the second time, it's substantially more expensive. When this all came about and became public, people were pretty upset about it. There's a lot of comment, everybody was grousing about it, but nobody did anything to stop it, right? Nobody took a proactive step. You have an opportunity to take a proactive step. And that proactive step is before this becomes a rule, you can make a comment. So you can go onto the Federal Housing Finance Agency's website and you can comment on any of their proposed rules. So right now there's two that are out that are pretty important, I think, to us universally. One is this, the Fair and Equitable Housing Program becoming a rule. The other one is a rule that was just proposed. I'm just screening look at my screen here. That would, it sounds really boring, like this whole conversation, right? Because I'm a lender and we talking weird stuff. FHFA requests input on the enterprise's single family pricing framework. Now, if you're not a mortgage person and you read that, you're gonna be like, I have no idea what that means. Here's what that means. They want comment on how they're going to price loans going forward for single family homes. And it directly relates to this. And the idea is to make housing more accessible to people that typically haven't had housing. We're going to lower the bar substantially for those groups. We're going to add costs to all other groups. And that's what we're going to do. That's what they want to do. Personally, I don't think that's a great idea. Personally, I think that's opening the door to some discrimination. I think it's opening the door to a really faulty finance system, just like we had in 2004 and 2005. And that led to just the debacle of the housing recession. And I think that it can be accomplished with other means, be that education or promoting opportunity in particular areas, or maybe encouraging or giving, taking some of this funding and promoting counties and cities to rezone areas for a lower density, or even to make areas. There's a couple of cities that have done this where they're going to have housing that's available only for people to buy that fit in those income categories. There's other ways to accomplish this goal than just raising the cost for people who have good credit and money down, in my opinion. If you share that opinion, or if you don't, you have an opportunity to go share that. And you can go and comment on this. The reason why you want to comment on a proposed rule is before a federal agency can put that rule into place and finalize that rule, they have to go through and review all of the public comments. And they have to at least tabulate them and say for and against, and here's the reason why. And then they have to demonstrate that they've taken those comments into account in their rulemaking. And this has had an impact in the past. You may have heard also the same changes in rules. There was another proposed pricing change where there would have been an additional cost of almost 0.5% in fee for anybody that had a debt to income ratio over 40%, which is all of our buyers. It's all of our buyers in Utah. It would have made it much more expensive for those people. Well, that was removed because the industry started screaming about it. And the NAR and the Mortgage Bankers Association were very vocal, and they pulled that back. So it makes a difference when you comment on this stuff. So Jeff, I'll send you the link. Take a look at this. I'll also send you the comment that I posted when you post a comment, it is public. It's going to have your name. It's going to have the information you're going to put in. You don't have to put in your address or your telephone number. I did because I'm fine with it being there. I'm sharing my comment and I think other people should. If you like this rule, if you think it's a great idea and it should be pursued, comment on that, right? But this is where financing for our industry is coming through is FHFA. And there's going to be a lot more of these rules coming and a lot more of these policy changes that are going to happen that will have a really significant impact on people's ability to finance. So I'll send that link over to Jeff. Jeff, feel free to share it. If you guys have questions, reach out to me. My email address will be on there. I don't know if that was clear or not. Let me tell you a couple of takeaways from this that I think you should know as an agent, though, in light of these changes. Here's what this means. If you're buying a home and you're not a first-time home buyer with income under the area median income, again, in Salt Lake County, that's $99,600. Utah County, it's a little less. Davis County, it's $99,600. So if your income is above that, or you're not a second home buyer, you may save a substantial amount of money by doing an FHA loan instead of a conventional loan, unless you're putting 10% down. So when you're working with your buyers that only want to put 5% down, if they've got a 720 credit score, for example, by going to an FHA loan instead of a conventional loan because of this rule change, it's going to be less expensive for them to buy a $500,000 house by about $180 a month. And what that $180 really translates to is an extra $30,000 in buying power. So your buyers that aren't first-time home buyers with this income under these levels may have significantly improved buying power by going FHA instead of conventional, even if they have really pretty good credit. Does that make sense? So when you're looking at what we're doing when we're looking at an application for a client is we're looking to see, okay, if there's a married couple, is one of them a first-time home buyer? And you're a first-time home buyer if you've not owned a house in the last 3 years. So if you've got a married couple, they owned a house together, but really she owned it in her name, he didn't own it, he wasn't on title because the way they did it at the time, cool, he's now a first-time home buyer. And so if his income qualifies under that level on his own, now he's a first-time home buyer and you can get a better deal for them. They can write a better contract or get better pricing and have better buying power by using that structure appropriately. If he's not, so we're going to look first, can we get this couple, this buyer into the category of first-time home buyer? And then number two, are they better off looking at FHA or conventional? And we want to run the numbers for both. And then we'll present that to the client and say, here's your options. Here's what you can buy for this payment. Here's what you can buy for this payment with this other program. And then that helps them make a little bit better decision and maybe helps you go find a house that might fit them better or give them a little bit more buying power. So when you're working with a client, when you work with your lender, those are the questions I would ask them is, can we make these clients first-time home buyers? Do they qualify as first-time home buyers with this new pricing structure for a conventional loan? And number one, and number two, if not, what does an FHA loan look like for this same client? And is that going to help them have better buying power or save some money? So from a practical perspective, that's what I would do. From a rulemaking and comment perspective, take a few minutes, go share your comments on this, good or bad. If you'd like, Jeff, when these come up, I'll just send you a notice or a link with the new comment opportunity for new rules that come into play like this, because I think it's really valuable. And the more people that share their comments, the more we can be involved in what's going to happen to us as an industry and what's going to happen to our clients and how we can better serve our borrowers and our buyers. There you go, Jeff. There's my spiel.
Well,
What
that's
questions
awesome.
can I answer?
I did put the link to the one that he was talking about on that housing finance plan proposal in the chat. If you wanted to click on that, open it up in your browser. I'll also put his links and his comments that he's going to send me later. I'll post this in our Team Limitless Facebook group, and in the comments I'll post those links for you guys so you can reach out to Alan if you have any, want to get some more commentary on this. Alan, one question I have is, I think you said this was proposed in September and then went into effect in April. Is this proposed rule already happening?
So, sorry, I said that in a confusing way. So the pricing change that happened for changing this pricing structure for first-time home buyers, better pricing, non-first-time home buyers, worse pricing, that was proposed in September. So that's been around for 6 months. And nobody seemed to know about it until suddenly May 1st, when it hit the news wires of this is effective now. And this kind of rule is happening the same way. So that policy change was proposed months ago, but I bet that by and large, most people in our industry had no idea that it was even in the background until it was in effect. And had we been proactive as an industry before it came into effect and started going through the UAR and the NAR and the political action committees that you're involved in, maybe that would have had a different outcome because it did on this other piece of that rule. This new policy change, so taking this policy to a rule, that was just proposed in April, and the public comment period is open until the end of June. Does that answer your question, Jeff?
Yep, gotcha. No, super important. I mean, imagine your clients hearing on the internet about these types of topics and asking you a question, and your response is, I don't know anything about it. I haven't heard anything about that, right? Because the internet is not always the best source of accurate information. But we need to know enough to at least guide them to the right information. So in this case, it would be like, hey, I know enough about it, but you should really talk to my lender. You should call Alan. Obviously, Alan's very articulate on this subject, and he's taken the time to study what it really means so he can better serve his clients. So that would be a great resource for you guys.
Thanks, Jeff. And I'm happy to just answer questions. Work with me as a lender or not. Let me help answer questions for you if you need them.
Hey, I'm just curious, Alan, you mentioned that there will be an increased cost in refinance fees. Is there a ballpark estimate on what that looks like?
It's already in place. It'll depend. So in the past, when somebody said, hey, what are your rates today? I could give people a general idea, how much money you're putting down, what's your credit score look like, and I could come up with a concept of what that looks like. Now, in order for me to answer the question of what's your rate going to be, I need to know their FICO score. I need to know, are they a first-time home buyer or not? I need to know what their gross annual income is. I need to know how much reserves they have. And I need to know their debt to income ratio. Because if I don't have those 5 pieces, I'm just guessing, because those now all factor into pricing. And one of those is refinancing. So cash out refinancing versus refinancing is different. Refinancing on a second home or investment property versus a primary home is different. Financing on a condo versus a non-condo is also different. So it's kind of all over the board and very, very situationally dependent. If you have really good credit and you're going to do just a refinance without getting cash out, that is going to cost you about 0.5% more today than it would have 4 months ago. If you don't have really good credit, if you want to get cash out, if you're in any of those categories, it's going to be substantially more expensive. And so where this becomes in play is I've heard the strategy a lot, the BRRRR strategy, buy, repair, refinance, rent, and go do it again, which I've used. It's a great strategy. Equity farming. This is going to make it much more difficult for people to go and engage in equity farming. Buy a rental property or buy a home, live in it, refinance it, pull your equity out, go buy another one. That kind of idea. This is going to make that much more expensive for people to pursue that. And so, if that is a strategy that you've got clients that are looking at, I think it becomes really important to analyze that and say, okay, before we buy this property, and we're expecting a refinance down the road, let's run some real numbers on that, what that's going to look like, just so that when they get 2 years down the road and they find out it's not what they expected, they don't come back to you angry that you didn't tell them, even though that's not really your job, right? That's the lender's job, but you're the face of the transaction, and they want you to know everything. So, now that you just have to ask the question and say, hey, lender, let's run some numbers on this so I can, make sure that my client knows what they're getting into. Shantae, did that answer your question?
Yes, thank you.
That was really good advice, Alan, because if their intention buying that property up front is to dispose of it later or to refinance it or whatever, that's all part of the same transaction, because you're getting them in the door to accomplish something that may not look like what they think it's going to look like. So those questions and asking what they're going to do with the property is super important, when they're going to be moving, if they're planning on refinance and all of that stuff. That's the whole picture, right? Good stuff. Good stuff. Anybody else have comments, questions?
Cool. Thanks, guys.
Thank you, Alan. So this was really, really good conversation. We've got those links. I'm going to post that in the Facebook group. It kind of goes in with something Eric and I were talking about earlier about having a specific topic to talk about during team meetings. Sometimes we're just kind of like having conversation about things that are going up, and it's not really that well planned out on my part. Kitty had recommended quite a while ago how helpful it would be to have a specific topic for our masterminds on Monday. I do like to talk about the market. I do like to talk about your transactions, your wins, your losses, what you're experiencing right now. But if you remember back when Kitty had proposed that, kind of the first one that she had proposed was social media posting. And we specifically then, or at least I was specific on inviting and make sure Sydney was on the call and Jen Rains was on the call, and those that were really doing it in a great fashion to be able to share their insight on that topic. So whether it's in the chat here, or you send me a text, or in the Team Limitless Facebook group, I would like to compile some topics for you guys that we can actually be a little bit more prepared for to talk and bring your questions and your concerns and your struggles with that area of conversation, so we can really have a good, productive Monday mastermind.
Hey, Jeff, can I make one more quick comment on that? This information is not known by most people, which is awesome, because you now know something that most people don't know and that they need to know. And so package this up, use it as a resource to go call all of those people who've made it, who were kind of passively shopping in the last year, and say, hey, maybe there's something we ought to look at again. If you're a first-time home buyer, maybe it's less expensive for you. Maybe we didn't look at this opportunity. This might be a great thing to just get in front of on social media. And you're now the expert on a topic that people don't know about, but is going to impact them. And so this information could be really, really useful. You're talking about sphere of influence as a really good reason to reach out and add value to your sphere. Anybody who was a shopper in the last year that didn't end up doing anything, this is a great opportunity to call and say, hey, you know what? You're a first-time home buyer, and there's this new change that makes it less expensive for you to buy a house. Maybe it's time to take a look at it again. And so use this information to go out and reconnect with the sphere or social media. There's good news that's part of it. So anyway, sorry to interrupt you. I just want to make sure I made that comment.
No, that was perfect. That's perfect. And in fact, I'll expound on that a little bit more. So reaching out to them, one other thing you might want to consider is something that Shayna and Alan are actually going to do together. And they're going to do a class for home buyers, and it help educate them, not just on the process. I mean, you hear the general term first-time home buyer class. That doesn't really attract anybody. That doesn't, they're already thinking, I would like to own a home. Being a first-time home buyer, a class like that has to have a hook and a point. And maybe the talking point is the changes in the industry and the changes that are happening that might make it possible if they've previously been told no, like Alan just mentioned. So inviting them to a group setting, whether it's on Zoom or in person, would be a great extension of that conversation, reaching out to them about these types of things and then invite them to some. All right, guys, we're about at the top of the hour.
Hey,
Give
Jeff,
you
how
one
long
more.
are you in the office today and tomorrow?
I'm sorry, say that again, Kelly.
When will you be in the office today and tomorrow? I need to talk to you.
Reach out to me separately and we'll have to set an appointment because I've got a lot of stuff outside of the office the next couple of days, but we can certainly plan something.
Okay, yeah, it's just something I just needed to talk to you about, so.
Okay, yeah,
Awesome.
we'll set up the time for sure, but I'll be here.
I'm on my way to Utah, so.
Awesome.
Okay.
Look forward to it. Look forward to
All
it.
right.
All right, my people, you got anything? Love you guys. Reach out if there's anything I can do for you. I will get this downloaded and put up in Team Limitless Facebook group if you want to look at that, and then I'll include some links to the material we talked about.
Thank you. Bye.
See you guys.